And welcome to the latest episode of Hung Chi and Sweat Money. We may or may not have ownership or other positions in the stocks mentioned on the show. Don't buy stocks based solely off what you hear from this podcast, and always do your own homework and research before investing in stocks. I'm your host, Kong, along with my co-host, Gibson. So let's take a look at what's in the news. Microsoft came out and announced that they would buy. They bought LinkedIn, or will buy LinkedIn, I should say, whose stock prices have slowly declined throughout the week. However, when compared to the price on Friday before purchase upon the announcement, the stock had jumped 47.57%.
Nice.
Yeah. Now, Bloomberg commented saying that LinkedIn's revenue has been slowing over the years, and that they took it as far as they could as an individual company. So buyout was ripe for the picking. Now, Microsoft will take out loans for the purchase, despite having enough cash to make it without a loan. Now, supposedly, this will actually help Microsoft reduce its tax burden. However, Fitch Ratings and all of the credit rating agencies are actually reviewing Microsoft's credit rating, which is currently at a AAA, and are looking to downgrade it to a AA plus because of this. Now, the only other company to have a AAA rating currently is Johnson & Johnson. Formerly, ExxonMobil had a AAA rating as well. However, it was recently downgraded in April. So just why the heck is Microsoft buying LinkedIn at such a high price that's much higher than its current evaluation? Well, according to Microsoft, it's because of LinkedIn's cloud platform, and they even have a little advertisement about it. So what is it about their cloud platform specifically? Well, I'm not going to get into Microsoft's recent history and checkered track record in making expensive purchases as of recent, but you can read those details in this article from the New Yorker. Now, what it does is give a really good example of how Microsoft can integrate LinkedIn. For most people who use a computer and are already using Microsoft Windows, thus naturally LinkedIn users aren't an exception. But with all the data on people and their connections, let's say I'm going to meet with someone new at a company, I can see how both of us are connected by certain people or groups and start up a small conversation. We could talk about a common person we know or find out other topics that the other person is involved with. Then on top of that, tie it in with other Microsoft services, of course, like Office, Outlook, and other software. Now, Bill Gates has come out publicly in support of the move, despite the high price, and it also goes against the opinions of the rest of the board. They think that the purchase is actually overvalued.
Well, I personally don't understand why Microsoft would be purchasing LinkedIn, and I also don't understand how LinkedIn operates as a company, because if you look at their annual reports, they've been like bleeding money at least this year or past couple of years. So, I mean, I think as a shareholder of Microsoft, I would really question this move of buying a profit or a profit negative company. You know, like the wisdom behind all that. I mean, they're either A, going to continue the business as is, which basically continues to lose money, or B, they somehow integrate it and expand or enhance their current products. But I'm not sure there's any products that they will have that basically will greatly benefit from the LinkedIn information. If anything, you know, you have to wonder like what can they gain from that information beyond what is already accessible, because I think there's a lot of like publicly available information, APIs they can integrate with, that doesn't involve with them absorbing the losses of the company.
Yeah, actually, some people are actually saying like what I just told you about, like where a lot of the information integration can actually be done through a partnership. So there really wasn't, if that is the real reason behind this purchase, there really isn't a real reason to actually purchase it. But then some people are saying that because Microsoft, by getting into LinkedIn, aside from the integration, but there's also, like you said, the information extraction with the people, with the users of the LinkedIn. There is that one example I just mentioned, but also more importantly, I think they're going to try and find a way to monetize it with ads. And because if you look back to that New Yorker article,
Mm-hmm.
they had actually tried to buy out Facebook, but Zuckerberg opposed.
Hmm.
And LinkedIn, pretty much, if you think about it, is really just a more professional version of Facebook. So if you have a targeted ad, a targeted segment where you can actually advertise to specifically for business related things, I think that might be a pretty good niche. Now, whether or not it's going to be successful, of course, we have yet to see.
I think that LinkedIn spends about, starting in 2012, they spent $1 billion, and 2013, 1.5 billion, 2014, 2 billion, and then by last year, it's like $3 billion on just operating expenses. I think somewhere along the line within those $3 billion, they must have invested some sort of R&D effort into monetization of their company. With that much money, they still haven't figured it out. I mean, brings the question whether or not they can. But then again, maybe it's like, I don't know, maybe there's some costs that they can cut to try to bring it back into the black. I just don't know. I mean, I guess it might be a good purchase. Then again, I mean, Facebook bought Twitter for $1 billion. Not Twitter, Instagram for $1 billion. No one understood that either.
Right,
It's
yeah.
another one of those purchases where the more I understand about the world, the less I understand about it. I'm like, this makes no money. It's bleeding money every single year. It's worth like at least $1 trillion. Arbitrary like purchases.
Yeah, honestly, I think at this point, most companies, when they're making purchases like that, it is going to be for that information extraction, like information on the users and all that.
I'm just saying that these LinkedIn's purpose was dedicated toward monetizing the information they had on hand, yet
Well,
they still
I
couldn't
mean,
crack
if you
it.
if you're looking at it from an information extraction standpoint, right? Everything is going to the cloud, right? So then, for instance, things like Cortana, that was one thing that was being pointed out at.
Hmm.
I mean, how are they improving things like Cortana? Of course, it's going to be through cloud services. So, more information at its hand is going to improve a lot of these algorithms, I believe. So,
Don't know. I mean, whatever that product is, I hope it's gonna make Microsoft a lot of money because they're
well,
spending a
hopefully, yeah.
lot of money on this one.
So, if it were up to you, I mean, considering that they're facing a possible credit down rating, um, you gonna do like are you gonna buy some puts on Microsoft or no?
I think Microsoft, I would probably just watch it either way. There's no clear buy or put on Microsoft. There are some things that are looking up for Microsoft. For example, like the Vive, HTC Vive has a huge integration with PCs, which is largely on Microsoft platform.
Right.
So that could benefit Microsoft. There's a lot of VR technology movement. Windows 10, there's a lot of things up in the air about that. We don't know what its impact on the market would be. So that's a lot of positive. On negative, I mean, they bought LinkedIn. Huge question on the movement. They're borrowing money to buy LinkedIn, which means they're going to have to pay interest on it. They might suffer a credit downgrade because a lot of people are looking at the decision going, what the hell is that,
Well, I mean, supposedly, at least they said that it was uh, with the way the accounting works, is that the tax deductions would actually work out in their favor, despite having to take out the loans. And I mean, I guess they calculated interest in as well. I mean, otherwise they wouldn't do this.
I guess so.
I mean, but of course, yeah, there is the possibility that they say, that some people say that they don't have the money to make this sort of purchase. So who knows?
Yeah, I mean, that's a pretty big bet and a huge deviation from the core platform as is.
Yeah. All right. Well, so the World Economic Forum notes that while Greece's national debt to GDP ratio is 176%, Japan's is at 215. In other words, even if you had successive generations to come, if there was no debt forgiveness, their economies wouldn't be able to recover. However, if there's no restructuring of their economies, these countries are going to run into the same issues that got them there in the first place. So, what's the issue with debt? Government spending for programs to that point, to the point that they borrow more than they collect from the rest of the nation via taxes. The other way a government can fund its projects is through bonds. The problem with that is that we need to pay the bondholders back for what they put in, and they rely on the fact that this can be paid off timely and in full. So when this isn't possible, the government goes into default, runs out of money, and it just makes a living in that country a living hell. So are countries like Japan and Greece going to go into default anytime soon?
I don't, not sure. I mean, the whole concept of national debt is mind-boggling in its own right, because basically running in debt means you have no money, and then just you still in debt, and then it just debt keeps growing, and then the factors that make that allows debt to keep growing is kind of it kind of is not very intuitive. Like for you and I, when we run out of money, we can't buy shit anymore. And
Right.
then when we run out of money, lack of income, we can't even borrow money. But nations have the ability to just borrow money indefinitely. As long as someone is willing to lend the money, and apparently someone are still willing to lend the money, so they don't have any issues with that. I think what's interesting is that national debt of the United States is kind of our deficits really, or national debt's really like internally owned, like owned by the people who, the citizens of the United States, as opposed to like foreign countries. The majority is owned by people who reside within the United States. I feel like as long as people are willing to lend the country money, then it won't go into default. The question is, what happens when it does go into default? No one really knows because it's never happened before.
Well, I mean, like if you look at countries like Zimbabwe and Argentina that we had talked about in the past, I mean, they're currently running into issues where they're going into hyperinflation because I mean, probably the GDP to the debt to GDP ratio isn't as bad as this, but it's
Hmm.
still pretty bad to the point that they're running into hyperinflation. The reason why they're doing that is because, I mean, as you were saying, they basically they basically print their own money, borrow from themselves, pretty much, and then try to pay pay off their debt or whatever, and leads like you know costs due to hyperinflation are just running rampant. Uh, People can't afford anything.
Well,
Their savings are gone pretty much.
well, hyperinflation. Well, yeah, you pretty much have no savings. But like, let's say you bought a house, you bought some land. Even though they're like everything goes into hyperinflation, the assets maintain its value, which is why like you buy gold. The asset maintains the original value. So even though the currency changes in value, the asset still has value internationally. Um, yeah, which is why like a lot of people who undergo like hyperinflation buy assets like gold, precious jewelry like diamonds and so on, just because that asset will hold its value even though the currency won't. But I think hyperinflation is an interesting thing just because it's a way for a country to not buy foreign goods anymore because their currency is worthless. But internally, I don't think much changes for people. Besides, if these are consumers that aren't used to buying foreign goods, then not much changes internally. Relatively speaking, everything kind of stays the same.
Well, that's also assuming that in this day and age where globalization has been going on for at least 20, 30 years, and I
Hmm.
mean, you could even argue way beyond that as well, that there pretty much isn't a country that isn't affected by globalization. There is no country that can only buy domestically made goods.
Well, it depends. If they could live off the land independently on their own, then they wouldn't be affected by the global products as much. Like if they don't purchase global products, then they don't really need global currency either.
Yeah, the only country I know of that kind of has that going on for itself is North Korea, and for maybe for other reasons, their economy isn't doing too good, but um, not a lot of countries are not doing trade or not in are not embedded with the global economy.
Well, until Greece gets out of the euro, they don't even have the ability to print their own money. So I think that's a thing to be worried about later.
Okay, so they print their own money. What sort of industries do they have? Okay, Greece aside, Argentina. I mean, like they're printing their own money. Okay, then now what? Hyperinflation. Okay.
Well, that's a problem for Greece themselves to solve, right? It's basically they have to come up with a product that the world wants, and then they'll purchase it. If they don't, then they won't, and it is what it is ultimately. What will happen to the United States when we run out of products to sell the world and there's no resources, right? Don't know. I mean, I think lack of resources is essentially how world wars happen. Like people fight over resources, and you don't have the resources to sell, then you might have to take. If you can't take it, then you just live with life how it is.
All right. Well, now when you look at the issue with Greece, and its cries for leaving the EU to better influence its own monetary policies draws many parallels to Britain's situation with its upcoming Brexit. However, this article talks about how the left wing is filled with Euroscepticism. While in Britain, the Euroscepticism is largely seen as a right wing movement, where a man identifying himself with the right wing group Britain First killed a politician who was for staying in the EU before he killed himself. Now, as a result of this politician's death, the Brexit referendum was postponed. It was supposedly postponed, but I mean it'll still go on. It was only for a couple days. Now, some would say that forcing countries to exit the EU is actually a tactic that the EU uses to force its way, since with Greece, the referendum to exit didn't succeed. Now, they were then forced to adapt harsher rules on their loans, which was not what Greece had expected. They thought a vote to stay would have ingratiated themselves to the EU and receive better benefits. This failure also sent a message to other countries that were possibly facing similar issues and were threatening to exit as well. So, um, now, if you want, here's a 2-minute video that breaks down exactly why the UK is considering leaving the EU. Pretty much, it can be boiled down to two things, and it's between balancing the economic benefits versus controlling the inflow of immigrants. Now, check out the 2-minute video if you want. Now, because of this impending Brexit referendum, on Wednesday, the U.S. Feds have decided not to raise interest rates because of the volatility it introduces to the market. The vote may be delayed, but it just means the anxiety will last that much longer. But upon announcing this, the dollar had dropped further that day. They noticed that consumer spending was reduced and job growth is not going as fast as possible. However, wage growth may be a positive in helping encouraging household spending. Any thoughts?
No, not really. I mean, it makes sense. Some concerns with the volatility that Brexit will introduce, but I think yeah, I mean, it kind of makes sense. You have a union that has a lot of, I think a lot of countries joined it and expecting a lot of benefits, but it literally just, because of Greece, literally announced that there really is a lack of benefits. If not, there's just like harsh punishments and impositions and restrictions. So they're like, well, why the hell are we here? So it kind of makes sense. I think the Fed's decision does say that we need to brace ourselves for upcoming volatility that might be introduced by the issues that the countries within the EU would have or currently be dealing with.
Well, the German Bunds are now at a rate of negative 0.03%. So why would anyone want to invest in a bond that they know will actually lose money? Well, if your savings account, if your savings rates is even lower, then that's a reason.
Interesting.
Yeah. So at least for the individual, I mean, for countries, I mean, like you have to worry more about inflation, deflation, things like that. So yeah. Now, here's something that crept up on us, despite having previously talked about this. Tomorrow, this upcoming Monday, Costco will be switching from using American Express to Visa credit cards. There are still some unpaid balances that American Express customers will have to pay off in due time, while also applying for new cards at Costco under Visa.
They lied to us. They said that the transition would be seamless. That's not seamless. I don't want to apply for another card. I was under the impression that Costco was just going to give me a new Visa card. I'm just going to use it.
Oh, you didn't apply for a card yet?
No, I was told that they would just transition me, a seamless transition to Visa. Seamless implies that they're just gonna give me a new credit card for basically Costco. I mean,
like they didn't even bother at least mailing you something, or?
I don't know. I have to check my mail. But
oh well, there you go.
I don't think I would have personally, if I saw a Visa card, like a card like mail, I would definitely read it first. But I haven't seen it, so.
Okay, well. Obviously, you need to hop into the stores. Well, times are... Oh, no, it's too late. They're closed.
Yeah, pretty much.
Yeah. Oh, well. Apple is barred from selling the iPhone 6 because of a copyright dispute in the PRC. The reason... Oh, hey. Jumping ahead of myself here. All right. Yeah, because of a copyright dispute in the PRC, sorry. The reason is that its phones look too similar to other local manufacturers. There's a specific one. I can't remember which one it is right now, but it's in the article. So, was Icon right in dumping Apple shares? Just FYI, this does not affect sales of the iPhone 6s and the upcoming iPhone 7.
I have no idea what how decisions of billionaires are made, but don't know. This is an interesting ploy. I feel like it implies a lot about like China itself. I think they're trying to encourage local development, and they're trying to go from copiers and replicators to like originators. So I think this is how they're gonna stay ground, and they're gonna say, hey, you know what, we're gonna start muscle out Apple. Like I think one of the product they have is like Wang Wei, right? I think Wang Wei phone or Xiaomi or some crap.
Oh, yeah, the
Xiaomi,
Xiaomi, yeah.
yeah, Xiaomi, yeah. They have like a lot of like little like products they're trying to do themselves, and I think they're trying to just encourage more sales of their own local companies' products, which might hurt Apple's like bottom line soon, but we'll see. Because I think in China, iPhones like kind of like a status symbol. Like the lack of vehicles and lack of ability to use vehicles has forced the consumerism to shift their stuff towards like wearable products like the iPhone. Well, not wearable products, but non-vehicular products. So you have like Rolex watches, fancy clothes, iPhones is another one. Yeah, so if China really wants to force out Apple, this is pretty bad news for Apple.
I don't think it's necessarily trying to muscle them out of the way, but it is a very dickish move. Well, let me rephrase that. I don't think it's necessarily trying to merely encourage domestic um, makers,
Mm-hmm.
because remember, China is in a weird situation where their manufacturers actually have to be licensed to either make products for the domestic market or to make them for the international market.
Mm-hmm.
It's just so that like this specific issue where if you have one person making things, they try to sell it to the U.S. It's one price, but then they sell it in China and it's
Mm-hmm.
another, right? They wanted to prevent this sort of issue. Now, as far as eating into Apple's shares, I don't think that's going to be the case. Apple still has that. It still has that brand name, that brand
Mm-hmm.
recognition that everyone thinks, hey, this is quality stuff. That is the higher end, as opposed to Xiaomi, which is everyone knows. Hey, this is domestically made. It's going to eat at the lower end of the market. So it's not so much going to affect Apple as much as it's going to affect Samsung, because that was Samsung's entry. Samsung's alternative was, hey, we're at the lower end of the market, but we match you in terms of capabilities and all this stuff. So Samsung is more threatened by companies like Xiaomi and any of these other Chinese manufacturers. Now, this thing with the lawsuit against Apple for them infringing upon China, I think, is a deeply rooted issue behind China's IP laws. Not saying that they don't necessarily that the government doesn't respect IP.
Mm-hmm.
I mean, yes, you do kind of have to hold their hand in enforcing it, yes, but
Mm-hmm.
there are laws in place. But the problem is that the laws are so obscure for something like this to happen. Um, I mean, like a couple years ago, actually,
Mm-hmm.
Jordan. Michael Jordan actually had his brand. He was suing a Chinese company who took the Chinese translation of his name, right,
Mm-hmm.
Jordan. So in Mandarin, it's Xiaodan,
Mm-hmm.
and then they started marketing all these clothes
Mm-hmm.
under the name Xiaodan, and they had a similar, like, Michael Jordan like reaching up in the air about to make a slam dunk sort of logo. And because they had registered Xiaodan
Mm-hmm.
as a separate thing, even though Michael Jordan, his brand is well known around the world,
Mm-hmm.
and like the logos are similar because they had registered sooner than he did in China. Then like they're basically like, well, your international notoriety doesn't mean anything in our country, and so Michael Jordan actually lost his own case in China. And I think it's just really ridiculous when you get stuff like this. But anyways, let's take a look at the weekend review. and it was not a kind week.
Mm-hmm.
um, Overall, the major three indexes fell anywhere from like 3 to 4%, and there are still worries about the upcoming Brexit and another round of Japanese stimulus that is worrying investors. So let's take a look at the international markets. Australia was actually up 1% if you look at the way the way it is over there. Like just
Mm.
literally skyrocketed and then like kind of like bounced around, falling slightly right now, but um, still high. Now, last Friday, New Zealand stock market went into a giant tumble, and even today opened much lower, but it bounced back up at a dramatic climb. More on that later. However, it is still not back to where it was last week. Now, the Nikkei bounced up 2%, and then the Korea's Kospi bounced up 1%. Then Shanghai, however, was down for whatever reason. Um, So although last Friday the Shanghai Composite actually broke with the norms of last week in the rest of Asia and actually rose, so maybe this is just a simple reversal. I don't know.
Not quite sure.
Yeah. So now moving on to the Taipei Stock Exchange. Um, yeah, unlike China, they're up with the rest of Asia too. So I don't know what gives. Although not as they're not at a high rate as the rest of Asia, though. I mean, they're only at about like what 0.54%, so that's not really something to brag about. But looking at Hong Kong's Hang Seng Index, it's even weirder than Shanghai, in that it opened much higher and is still up compared to last Friday. However, ever since its opening, it's been going down. Now, it was predicted that Hong Kong's Hang Seng Index would end in the red, and it's not quite there yet, but yeah, I don't know. Unlike the other former British colonies, New Zealand and Australia, I don't think that who don't think that the risk of the Brexit is subsiding. But yeah, I don't know. It's just weird. Now, I mean, along with these two other countries. Oh, sorry. These two other countries, the country formerly known as the British of the East, Japan is also up as well as Korea and even Taiwan. So I don't know why Hong Kong is down. Maybe it's because Shanghai is down. A lot of stocks that are listed in Shanghai are also listed in Hong Kong, at least the ones that are really
Well, the
big.
stock price is a reflection of people's purchases of the stock price
Well,
for whatever
I
it is
mean,
right
it's just
now.
that according to analysts, at least
Uh-huh.
the chaffy, the noise is that they're saying that everyone's still like Hong Kong and Shanghai are still worried about the Brexit. But then if you look at the other markets, that's not the case. So
Well, like I said, it's basically a reflection of people's like purchasing of the stocks. If they slow down on buying the stocks, they don't buy it at the last most recent price, and the stock prices will go down. So for whatever reason, if they decide to not buy, then the stock price will go down. If people refuse to sell, well, it depends. I mean, as long as there's buying action, then the prices will be maintained. But if it slows down, then the stocks start dipping.
any explanation as to why
I
they
would,
opened so
I
high
think
and then
we'll
just
have
started
to
falling?
examine each country's like news and sentiment on what's going on to see why they might think a certain way. For example, certain countries might not even give a crap about Brexit, or like other countries are just so far away they have their own concerns, their own metric of measuring what's involved. Then the other question is like, well, who's involved in the index? Do they suffer from a lot of foreign influences? Like, is like Carl's ICANN invest in this country? Is he basically buying more stocks here, not buying more stocks? Who knows? There's like a multitude of factors involved. Like, is there like a lot of foreign investment from a certain country into these stocks? Yeah, for example, let's say that United States is going to increase its interest rate, the entire world's stock prices might drop. And why is that? Well, basically, a lot of investors are like, you know what, I don't want to. The well, there's an equilibrium in the stock prices,
Yeah.
and basically, when the interest rate increases, then it might just offset the equilibrium enough to have a measurable impact. So a lot of people who are on the fence about being in the stock market or investing in a bond or something more secure might just go ahead and just invest in that. So that will have the global influences.
Well, I mean, I tried to look for news articles in every country related to what's influencing their major indexes, and
Hmm.
I couldn't find anything within the past 24 hours.
I,
So,
I would say examine the every single index for its components and see if there's any type of effect on those components itself. Like if there's a strong purchase or a strong sale in performance of whatever that company is. I think that would be telling of why it went up or down. But then it's a little bit even more challenging than that because like regular consumers don't really have that much of a pull on or effect on the stock prices. So you have to look into like, is there a index fund like Vanguard shifting their stocks around, rebalancing the portfolio? Is there a major player like Carl's Icahn who's like buying something, selling something, Pepsi, Coke? And these are things that you won't even know about until they announce their 13F, which is the basically it's like a tax form that big corporations have to fill out
yeah, but
to.
we're talking about like international stock markets. There's not going to be a 13F.
No, there probably isn't. But if we had influence on it, then it would show up in our 13F.
Well, yeah. Well, anyways, here's a new segment called Investor Sentiment. So, based off of the previous recommendation that we had, looking at investor sentiment. So, overall, a lot more people are bearish than they were before. But, however, according to the AAII, it's within historic norms around this time period. So, yeah, that's pretty much that. Um, take that as you may. Let's take a look at the playbook. Now, once again, just a reminder, none of the following should be misconstrued as financial advice or investment advice. This is merely provided for documentation only. Connecting Phillips. Overall, between selling the stocks I had owned, making an early sell with penalties, and then buying back, I'm still down. But sentiment is it'll rise about 50%, and in that case, I may come out even. Now, Disney, almost back on top. Let's hope profits from China will raise things. Dunkin' Donuts is so far the best investment decision I've made in 2016. Square, all I have to say is get your act together. Um, Now, Square just recently ended a lawsuit with a Washington University professor who says he came up with most of the technology for the device that the company uses to create uh, the company uses for that little dongle that attaches to a phone or tablet to accept payments via the audio jack, as opposed to using USB or Lightning ports for, uh, the Lightning port for the iPod. Now, this means that it leaves these ports available for to charge the device to continually receive payments and stay charged. Now, the reason for the lawsuit is that the professor feels that his contribution to the company was significant, but was cut out of any deals in getting any stocks for reimbursement. Robert Morley Jr., the professor who initiated the lawsuit, will be awarded $15 million in the settlement.
That's horrible news for Square. If anything, that might cause it to drop just because it is a possibility that he might be awarded $50 million
Well,
for a settlement.
they've been rising recently.
Really?
Yeah.
Well, who knows?
I mean, I'm still in the red with these guys, but yeah. Now, on the other hand, big banks, like the one pictured in this article, Bank of America, are making money by increasing their overdraft fees. So if you don't have the money and accidentally make a purchase with your debit card, you'll be charged for your mistake, penalized for being poor.
That's pretty much what it is. It's always been the case. Nothing new there.
Yeah. So now for both of our investments in Disney, we are looking forward to the new Shanghai Disney that opened on Friday. Now, sadly, I guess I forgot to include the article. I mean, yeah, I guess there's really nothing that's sad about it,
Huh.
except for the fact that their stock prices are still. I mean, I think I'm slightly up.
Sure.
Hold on, let me double check here. Yeah, I'm slightly up. Uh, but I mean, not by much. Now, the other thing is, I mean, you've seen the other articles as well that I've been sending you about, like, what is it? There's this one article where this one kid, he had to go take a crap, so he runs into the garden and like pretty much hides there so that he could take his dump. despite having a bunch of public restrooms in Disneyland.
Mm-hmm.
And then, of course, while he's doing that, his grandparents are like, "pong typhoon," like
Yeah.
making sure no one else is seeing where this kid is at or whatever. It's like, oh man, so much for 5,000 years of history. But
Huh.
hey, commentary on these cultural and political issues. That's topic for another podcast.
Yeah. What
So
Disney needs to do to counteract this is increase their prices.
yeah, seriously. Now, I mean, I think right now the price for a ticket in Disney China is what, 60 some odd dollars,
I
whatever.
don't remember, but
Yeah.
insanely cheap compared to the ones that like the Disneyland parks elsewhere. So I think Disney's game plan is to take a loss, like at least in next quarter for the park. They don't expect to make any money. If anything, they expect to lose money.
Right.
But I think is that what I like about Disney is their expansion into China, and there's just so much room to expand in China. I think Disney and a lot of theme parks, in fact, a lot of other theme parks are trying to follow suit. Like Six Flags want to get in on China.
Right.
Like yeah, I think a lot of major theme parks in America wants to get in China, but only Disney has so far made the jump.
Yeah.
So, and if anything, I think there's like 20 plus amusement parks in China, and I think they're massively threatened, and I think Disney's just there to stay. It has a lot more umph than them. It's a lot more quality over quantity. I just really believe in that direction, and I think, and then they're trying to expose their brand more, which can increase purchases in Disney products in China, and the China's the second largest economy, so if Disney can tap into that, I think that would be a huge bump in their revenue and profit margins. In fact, a lot of analysts do agree that it's gonna bump the profit margins and revenue. So
It's going to bump it, but I mean, by how much? Because if you look at all their other Disneyland theme parks,
mhm.
Tokyo, Hong Kong, Europe, those three mainly, and I mean, like the American ones are, I mean, they're okay, but they're
Mhm.
not doing all that great. Everywhere else, however, it's just been falling.
Yeah,
So is this going to be enough to make up for those losses?
I'm not sure if it's gonna be enough to make up for those losses, but I think in terms of a successful location, I think China would definitely be a successful location. It's if as the world's economy declines, people are gonna shift from luxury goods more back to normative goods, and theme park amusement rides would be considered a luxury good. Then again, I mean, if China doesn't have the money, no, if the United States doesn't have the money and China doesn't have the money, then nowhere in the world would they have the money to actually patronize a theme park. So I do agree with this move toward it, and I think as China's economy shift from more of a labor economy to to more service economy, and shift from like savers and more into consumer based economy, then I think a lot more people are going to patronize on things like Disney. So I think it's a good movement so far to keep exposing the brand, trying to pander essentially to the Chinese market. I think having a physical location on site and long-term agreement with the Chinese government to basically exist in China is a good move for them.
All right, well, let's go ahead and take a look at the week ahead. Monday, there's not really a whole lot we're looking for, but Tuesday, Janet Yellen will be making a statement, and then Wednesday she'll be speaking it in. But before that, the housing price index and the existing home sales report for the month prior will be out. Thursday, you have jobless claims, Chicago Fed National Activity Index, PMI Manufacturing Index, Bloomberg Customer Comfort, new home sales, leading indicators, and natural gas reports and Fed balance sheets will be, and the money supply will be out. Money supply report, I should say. And Friday, you have the durable goods orders and consumer sentiment report. So quite a bit to be looking after. So let's take a look at recommendations. No, this shouldn't be it. This is for a couple weeks ago. I guess I forgot to include the recommendations. I'll leave it for next week. So that's it for now. We may or may not have ownership or other positions in the stocks mentioned on the show. Don't buy stocks based on information in this podcast, and always do your own homework and research before investing in stocks. And if you'd like this episode, please subscribe to us on YouTube. Now, we're having trouble with our iTunes feed because we ran out of space for audio uploads. But please don't forget to subscribe there. We'll fix that issue pretty soon. And also subscribe on other platforms as well. All right, that's it for now. Bye.